Hi everybody, Wagner Nolasco here from Built to Rent Direct, and today I'm answering a question that has been in my mind for a long time. A lot of our investors keep talking about cash flow this, cash flow that, return on investment, cash on cash returns, and it's not clear to every investor, as it was expressed to me, what is truly cash flow? How important cash flow it is on your rental property? How is that gonna change your life over time? So today we're gonna talk about a very simple, but yet very important topic, which is cash flow. So let's start with what's cash flow. Cash flow is basically a positive cash flow, of course, is basically what it is, your total income on a property annualized minus all the expenses that you have incurred on the property that year. What are those expenses? Mortgage costs, principal and interest, property taxes, insurance, property management cost. You also have vacancy in some cases. Here in Florida, we're very lucky. We have 0% vacancies on all of our new properties right now, and that's what we sell is new. But those are actually the main components of all the expenses you're gonna see it on your cash flow. So again, cash flow, positive cash flow or negative cash flow are actually impacted by total income, rental income on a property minus all expenses. And that's gonna give you, in Florida, at least for our properties right now, it's a positive cash flow. I'll give you a perfect example. I'm gonna buy a house in Ocala, Florida for $225,000, right? My cash exposure on that purchase is about $50,000. My down payment is usually for a Fannie and Freddie loan 20% down. So let's just say that with closing costs, I'm out of pocket about $50,000. That's my total cash exposure on that property. How am I going to calculate that cash flow? I'm buying a $225,000 single family home in Ocala, putting $50,000 down, including all closing costs, right? So the down payment plus closing costs about $50,000. How much am I making on that house on a per year basis net generated income or positive cash flow? In Ocala, on a $225,000 house, you will probably get about $400 on positive cash flow. Of course, that can vary depending on your credit score, how high, how low your credit score is, your debt to income ratio. I'm not going to talk about credit today, but it's really important to let you know that your positive cash flow is contingent upon the quality of the property you buy, but also upon the quality of your financial strength to qualify and obtain a very low interest rate fixed for 30 years. That's what we usually suggest to our clients, especially because we are on the low 50-year mark of interest rates in this beautiful, amazing country of the US of A, right? So keep that in mind. Once again, if I have a $400 positive cash flow per month on that property, that's actually annualized $4,800 positive cash flow per year. If I divide that by $50,000, which is my total cash exposure on that house, if math serves me correctly, in my mind, that's a 9.6% positive return on my cash on cash basis, right? So I invested money, $50,000 into a $225,000 property, which is generating me $4,800 a year on positive cash flow. And it's giving me a total cash on cash return 9.6% per year. Is that good? No, that's amazing, right? That's amazing because we're not talking about appreciation, which in Ocala, it surpasses over 12% per year. This is, of course, we're not going to count on appreciation because, you know, I tell everybody, you cannot take appreciation to the grocery store and buy milk from it. So it's something that you hope that it comes. You don't buy a property only for appreciation, but you do want to count on appreciation, especially on fast-growing and very established markets like Florida. So appreciation on a house like this that costs you today $225,000, it's probably already built in because we only sell properties that have built-in equity. So you probably can sell this property by the time that you take possession of the property between $245,000 and $249,000. What does that tell you? You have almost $20,000 to $25,000 on positive already appreciation built into that property. What does that mean, Wagner? It means nothing until you realize your gains, right? So appreciation is something you hope that it will come. Nobody can promise you, and if they do, they're actually making a false promise to you, but it is important. Another thing that real estate and only real estate can give you, and it's really important as well, is your tax benefits. So cash flow, it's not how much you make. I keep telling people this. Cash flow is truly contingent upon how much taxes you're going to be paying on the cash flow, right? So real estate, there's something that I'm going to do a video with my friend Eric very soon in cost segregation and bonus depreciation. So real estate offers the amazing IRS that you guys know that controls our taxes. They tell us that a single family home can be depreciated fully in 27.5 years minus the land. So what does the cost segregation and bonus depreciation do for you, investor? It will actually accelerate the depreciation of your house so you can have more tax credits towards, and that can be applied towards your K1. That's going to come on your K1. I'm not an accountant, but please verify with your CPA or accountant. And actually that will give you credit, tax credits that can be applied towards the rent. So the whole goal is everything you make on your positive cash flow is tax free. That's the goal, right? That's the financial freedom that real estate can give you. So very basic, going back to the principles. Cash flow, positive or negative, is how much that property generates on income minus all expenses and whatever it's left on the bank account on a monthly basis for you, investor, right? In a great market, it's going to be good positive cash flow. In a bad market, it's going to be negative. If you buy a property at very high interest rates, you can actually have negative cash flow, but appreciation. Examples: San Francisco, New York, a lot of cities in California. You're going to buy a property for a lot of money, but your rent is not going to be actually on a positive cash flow basis. If you are lucky, you're going to be breaking it even. So what are you betting all of your horses on is appreciation, right? And of course, the tax benefits that you're going to take from it. But that's not the case in Florida. Here in Florida, we have, and that's my personal philosophy, positive cash flow, appreciation, tax advantages on your loans, built-in equity. If you don't have those four, built-in equity, positive cash flow, tax benefits from your income, I'm not buying it, right? I'm just not buying it. And again, I buy properties everywhere I sell. I eat from my own cooking. Very important. Ask your builder, your developer, do they invest? Because a lot of people can sell you anything. Do they invest where they actually build? I do. And if you guys come to Florida, I'll show. I have 5 houses in Oklahoma. I have 1 townhome in Natty Townhomes in Palm Bay. I'm buying 2 new homes in Abana Oaks. So every project that we launch, I keep some properties for myself because I truly believe in the results. So cash flow is the source, is the key, is the soul of a good deal. Do not buy anything that doesn't have cash flow. If you have any questions, I can actually do a webinar for you guys about cash flow and bring some tax experts as well, because I'm not a tax guy. I'm an investor, I'm a builder, I'm a developer, but I'm not a tax guy. I can absolutely do that for you guys. Again, send us ideas. What are you looking for? We're gonna cover a lot of educational videos now. You probably are tired of us talking about properties, right? Let's talk about what those properties can generate for you. Cash flow, cost segregation, bonus depreciation, tax benefits. You know, what actually real estate is looking like, forecasting for real estate. What is it looking like? We're actually bringing a lot of new guests to our show as well, our YouTube channel and our podcast, so stay tuned. We have some big names that gave us the okay that are gonna be on our show very soon. I just had my friend J.O. Brisby, which the video, why cowboys are smarter than Wall Street people. We are currently having inflation. Look at my Instagram this week. I'm gonna show you how much a ticket for Walt Disney used to cost 50 years ago when they opened and how much it is today. And you're gonna be blown away. If that's not inflation, you can call adjusted cost of living. I don't know what it is. So prices are going up, cost of goods are going up. Real estate is actually the biggest leverage and hedge that you have against inflation. So think about it, what your future looks like. What are you doing to change it? One of the things that I tell my investors and actually my friends all the time is this: you guys can study anything you want, all you want. You can listen to every podcast on the planet. You can be the most educated investor. If you take no action, you know where you're gonna be in 2 years? Sitting there, watching my video, listening to that podcast with 0 properties, 0. And you know how much money you're gonna be making? 0. Invest in your personal development and knowledge and education, but take action. Take action. Make that first move. I don't care if you're buying in Florida. I really don't. Buy it. Whatever your goal is, go for it. Believe in yourself. Make the right decision. Find the right team that is going to support you. That's my message for you guys. I'm Wagner Nolasco with a series of educational videos for you guys coming up. Give me a thumbs up on YouTube if you can, if you like the video. If not, let me know what I can improve. Follow us on Instagram, YouTube, Facebook. Let us know what you need. We're here for you. My name is Wagner Nolasco, the founder and CEO of Built to Rent Direct, and thank you very much for watching.